I've always been a firm believer that your digital payments are just the initial hooks to get people into the mainstream of financial services. The next logical step, and which can actually give a lot of exponential growth both to the fintechs as well as the financial institutions, is how do I convert these into lending products? How do I convert this into insurance? And unfortunately, most of the Asian countries, we are extremely credit hungry and we are extremely underpenetrated on the insurance side, right? We have seen that journey of ours, right? And we are seeing a tremendous growth. One is, of course, the logical one, which is the consumer side of unsecured business. But the merchant lending is something which is giving a tremendous upside. Same on the insurance side, while a lot of non-life activities gain more prominence as compared to life, because those are fast transacting, like your car insurance, health insurance, fire burglary insurance. Those can be bundled again with your merchant lending, etc. Right? So you then start building layers and layers on top of it and provide more and more financial services. I mean, this is an old rule in banking that if you don't cross-sell and upsell to the same customer at least 2 or 3 products, the stickiness never develops, right?
Hardik IVF and Fertility Center,
where miracles come to life.
Okay. Ladies and gentlemen, a very good afternoon to all of you, and welcome to the Fireside Chat. Ritesh, welcome to Nepal once again. It's always good to have you here. It's always good to have a conversation with you.
Yeah, thank you. Thank you so much for having me. I think I've been quite a frequent visitor to Nepal in the last 2 years. Have made quite a few friends, many familiar faces. And again, thanks to Setopati for, inviting me for this event. I think you won't find a better advocate, of talking about synergies between bank and a fintech. And I'm a firm believer that collaboration makes you better and competition makes you faster. So you can't have a more appropriate topic than a competition which will make you better and faster. Sure. So, yeah.
So ladies and gentlemen, we only have half an hour, not a lot of time. When it comes to payment system, AI, technology, blockchain, I think we can talk for hours and we'll still not have enough time, right? So, but I'll try to squeeze in a few minutes for questions from the audience. We'd like to hear from you also, audience, okay? So let's start, Ritesh, So Ritesh, my question is, we've seen a significant growth in adoption of digital apps and QR in Nepal in the last few years, right? And apart from our domestic payment systems like, the Phonepay with the F, right? Phonepay and Nepal Pay QR, and then the Connect IPS, which is equivalent to our Connect IMPS. With adoption of all these, and now we are also connected to the international rails like UPI, your Phonepay, and now UnionPay recently, Alipay. So from your perspective, how do you see this shift, happening, the digital shift that's happening in Nepal? And more importantly, how do you see the collaboration that's happening between the bank and the fintech?
Yeah. So, like I said, right, I have been privy to a lot of developments that have happened, especially in the last 2 years. I think one thing that clearly stands out is the rapid leapfrogging that has happened. Okay, and my compliments to the Phonepay and team, because for some of the South Asian economies, if you were to look at it, right, we always had the herd mentality of following whatever happened in the West and trying to force fit some of those solutions out here, right? That's why they paused the payment gateways, etc. But I think going the mobile first, the QR first kind of a route is something that will give you a tremendous upside, right? And again, breaking away from the traditional card and a pause, because the price points of doing those businesses are very high. See, many of us sitting in this room come from a position of privilege. So we are any which ways, exposed to a lot of organized ways of doing. But when you look at the bottom of the pyramid or some of the SME, MSME merchants, a QR is the right fit, right? Because that redefines the price point at which these businesses are done. So again, like I said, that was a rapid leapfrogging done, which we actually see a lot in the South Asian region where QR is more prominent. I think the second thing, which again is interoperability and ubiquity, right? I am a firm believer that interoperable payment systems are the ones that can help you scale fast. It brings a lot of standardization as far as the operations are concerned. A lot of educational overheads gets divided among all the member banks, and it becomes that much easier to educate the consumer as well as the merchants. And from a ubiquity perspective, I mean, I'm seeing that, you know, today a QR can be accepted at a very high-end shopping mall, or maybe a tea stall in Pokhara, or maybe some SME, MSME in Lalitpur. So that's the beauty of, you know, the reach, you know, education that has been created. The third aspect, which is again coming back to the cooptation piece, I think a lot of dust has settled over a period of time. Okay, I have been privy to these discussions since around 2014, 2015. Okay, it's like a deja vu for me because we all went through those heartburns in India. But I think over a period of time, that challenger versus incumbent, the David versus Goliaths, and the fintechs are out here to eat the bank's lunch and all of that, I think that has settled down over a period of time. I think better sense has prevailed. People have now understood what are my core competencies, what are my strengths. Fintechs are very good in distribution. Fintechs are very good in creating customer engagement. Fintechs are very good in UI, UX, right? Banks on the other side are like, you know, very good with compliance, with governance, with capital management, the risk management part of it. So I think, and not only in Nepal, but that is something that we are seeing slowly developing in this part of the region, right? And the fourth point, I think, is going international. So while you have created something which is at a domestic level, taking it international, and there's my personal vested interest as well, right? Because we started with the Phonepay apps being used at the Phonepay QRs out here. Today, as we speak, we are almost clocking 8,500 transactions a day. And we know for sure that it will keep growing. But having these arrangements extended to different geographies, right? And going forward, I would also urge that you keep adding more use cases. While P2M, which is the person to merchant, is one such use case, you know, the cross-border domestic remittance is another use case. I mean, a large part of Asian countries are normally the ones who receive inward remittances, which contributes a significant percentage to their GDPs. So I think, yeah, these are the 4 or 5 areas that I'm seeing. And again, there's a lot of work to be done, and I'm sure that there is mind being applied in trying to add more and more use cases.
Sure, it is. In fact, let's pick up that point you spoke about, the deja vu, right? See, now Phonepay, your Phonepay has built a massive sort of a payment network in India, right? And from a banking perspective, you worked in a bank before, I still work in a bank. We have a very stringent sort of a regulation and a compliance requirement, right? From your experience, what were the sort of main challenges that you had, especially in the early part of your, the early part where you're trying to plug in with collaborate with the bank? What sort of challenges that you faced, and what sort of a learning that we can get out of that?
So if you ask me, when these concepts were very new, right, and again I'm talking of a decade back, there was an existential inertia that existed, right? Reason being, fintechs were full of energy. They thought they have addressed a pain point and just wanted to ramp up the solution that they have created. But banks, if you see historically, are designed to be very risk averse, right? I mean, if someone comes and suddenly says, I'm going to pump in millions of transactions, the first thing they will worry is, oh, will my core banking be able to handle it? Or what if these are very risky transactions? What if these guys have not done the KYC properly? Whose neck is on line, right? It's like, I often give this analogy of an elephant and a cheetah. Okay, banks are like the elephants, very stable, robust, knows how to manage the balance sheets, very good with governance, they know how to comply, right? But they may take a lot of time. They may not be agile and nimble. The cheetah is extremely fast, right? But having said that, you can't even do the role reversal, right? You can't, I ask the cheetah to lift a house and elephant to run fast. So you'll have to find a working arrangement where you will have to give the banks and the financial institutions. And the reason I'm saying financial institutions is because whoever is regulated by the central bank will go through the same heartburns and the hardships, right? So the idea is, how do you give them comfort? How do you tell them that, okay, we know the rules, we will demonstrate the solution in a way that it will comply and check all the tick boxes that your compliance, your operations risk, your audit teams want you to fulfill. At the same time, to give them an assurance that we are not here to exhaust your infrastructure, but to generate a very definitive and measurable revenue by way of, even a low ticket size customer acquisition, right? So you show them that you are here to bring value and not just, choke their ecosystem. It's actually like, mixing oil and water. There will always be that institutional inertia because they don't have faith developed on the fintech, and there will be the fintech who will be having that, the typical impatience that they have. But what we have been able to, give comfort to the banks and financial institutions is that we are not vendors or technology service providers, but we are your strategic partners. I guess that is where it tilted things in our favor, where we were able to demonstrate to the banks that, yes, while you are the banks, while you are the license holders, but we also can empathize, and we have built solutions which will comply perfectly well when the regulator comes to audit you. I mean, just to give you an example, right? Today, when we talk about the scale at which we operate, we have almost 700 million registered users. We have 50 million merchants that we power. And on a daily basis, we are processing almost 400 million transactions. Now, 400 million transactions, how do I give an assurance to a bank that all of these are going properly? So we have developed an in-house fraud and risk arrangement engine, which for processing those 400 million transactions, I do almost 90 billion clicks in the backend. And those are the kind of safety nets we are able to demonstrate, which I think the banks and financial institutions now have a faith. And also, I would say at some point of time, purely because, I mean, of course, UPI being the example here, because that's what has suddenly shown a tremendous scale, the regulator also noticed this, and they came up with, how do I call it, maybe a lighter version of regulations for some of these players. I mean, I was just hearing the Honorable Finance Minister, and I clearly saw him alluding to some of these aspects, right? So while the political intent is there, I think the regulator will also now have to step up by defining proper rules and regulations, and if need be, come up with slightly lighter regulations for some of those entities who play in a niche area.
I absolutely agree with you when you said the strategic partnership with the bank. But what resonates with me very well also is whose neck is online, right? That question very often between when the bank and the fintech.
And that's exactly the point I said, that if the regulator also regulates these entities, either by way of creating some kind of a sandbox or by creating some kind of a lighter license in which you do an activity-based licensing rather than a principle-based. Right? Today, tomorrow, fintech comes and says, I want to be very active in digital payments. You can't have the same overheads of doing a licensing as you will do to a consumer lending kind of an institution. You regulate them only for that, which means the consumer who is going to engage with that fintech will also have confidence that these guys have the blessings from the regulator. And the banks who would be collaborating or working with these entities will also be comfortable that they have gone through the litmus test that the regulator has prescribed.
Yeah, yeah. Ritesh, what I would like to really understand or learn from you also is, let's talk about some of these new emerging tech pieces, right? Something like, the AIs, MLs, blockchain, new payment rails like, blockchain has created the stable coins, CBDCs, and then now Swift has also upped its game, adopting ISO 20022. And I mean, the market is flooded with so many sort of payment rails, right? So my question is, how are these new sort of system that is appearing is going to impact the operating architecture of the payment industry, right? And particularly, how are we in the South Asia positioned in this respect?
So, look, let me put it this way. Let me start by giving our own example, right? I just mentioned about the scale at which we operate, right? You call it AI, you call it deep machine learning, you call it robotic process automation, you call it simple automation, whatever be the nomenclature. I'll not get overwhelmed by those things. Idea is there is a pain point in your daily business. It could be related to customer acquisition, it could be related to operational processing, it could be related to settlement reconciliation, it could be related to customer grievance redressal, it could be related to your risk management. I'm just saying because these are the 5 things that we face on a daily basis, right? When I say that we process 400 million transactions on a daily basis, can you guess how many people we would be having in the backend to address the operations, the fraud risk, and the settlement recon for this? Just take a wild guess.
In your setup?
Yeah.
I don't know, must be 1,000, 2,000?
So we do it with 700 people,
700,
right?
okay, that's fine.
So the point is, some of these problems that you will face in the future are not problems that you can solve by just throwing more people at it. You have to be intelligent, you have to be innovative, and a lot of these things will work when these things are very voluminous in nature, when these are very repetitive in nature, because what is AI at the end of it? It's only modelings that you can do basis whatever historical data you have, and you train your processes to behave in a certain way, right? Otherwise, if I were to do the traditional business, I can't even imagine how many people I would have to have on the shop floor to solve all of this. And I don't know how many things will fall between the cracks, right? So these things, somewhere or the other, are staring at us. Somewhere we have imbibed them without knowing that this is the actual terminologies that we are using, but it's here to stay for sure, right? Coming back to, you know, your piece of whether it's the SWIFT, whether it's UPI 2.0, whether it's collaborations with foreign entities. I recently heard the news of Phonepay tying up with China Union Pay as well, right? Yeah. In the past, they have done it with Alipay. We already have a tie-up with UPI as well. I call it, these are the first level mesh that we are trying to create. MESH, not the MESH.
Not the mesh, yeah.
But in future, right, if you ask me, a lot of these will be asset agnostic. It will be form factor agnostic. Because irrespective of whether you're going to use a digital wallet or a card or a prepaid instrument or a token or a CBDC, the rails on which it will get processed should be agnostic to the, I mean, honestly, tomorrow if you say that all my transactions are getting processed on a blockchain, as a user, it doesn't matter to me. I have tapped the card, swiped the card, or scanned the QR. That is something which is happening in the back end. But it has to be so seamless and error-proof, right? That at the end of the day, the customer grievance redressal and your fraud risk is something that is minimized because of all of this, right? And coming back to South Asia, I think today South Asia, I would say, is almost like a sandbox for the global scale. If you see, most of the South Asian economies today are going mobile first. They are going with very frugal innovations, and the reason I'm saying frugal innovations because QR compared to a high-end Android POS or a very high-end payment gateway turns out much, much cheaper, right? Plus, if you look at it, a lot of these entities have also created a very robust digital public infrastructure. So I have a very smooth way of onboarding customers. I have a very smooth and measurable way of doing a bureau scrubbing. And then I have a very smooth way of processing transactions. Which if you still look at West, and I often jokingly call them that these guys have become museums of, you know, very archaic banking systems. The South Asian region, if you see, is actually running at a much, much faster pace. So that's why I call it the global sandbox.
You know, I really like to ask a lot of follow-up questions on this, but I think I'm running out of time. I'm going to ask one last question. After that, I'll come to the audience. Audience, I'd like to take at least 1 to 2 questions from you. Okay, now, probably my last question, if audience have a lot of questions, is about the regulatory engagement, right? A very important piece here, right? Now, if you look at these developments through the lens of regulations, right, regulators, we know financial innovation, not only in Nepal or India or in South Asia, across the world, the innovation happens at much faster pace than the regulation, right? So from your perspective, how can regulators engage with a lot of these new technologies like AI, blockchain, digital assets, for instance, right? Because it's in the interest of regulation, it's, you know, they want to make sure there's a stability, consumer protection is addressed, but at the same time, innovation is not hindered.
Yeah.
Right? So how can regulation do that, regulators?
See, firstly, I think I buy your point that innovation will always be ahead of regulation. Innovation will be faster than regulation. But I don't think so innovation can happen in absence of regulation, right?
Okay.
A lot of innovation today is also happening because there are regulations. And for example, today, there is a regulation around that you need to do a KYC of a customer before you onboard him. Innovation will be, oh, can I do a video KYC? Can I do a non-face-to-face kind of a validation? It's the same regulation on a KYC, but somebody is trying to come and do it in a much more efficient way. So I will give, look, the point is in absence of very clear guidelines, right? The capital institution will never get invested and the customer trust will never get established. Because finally, at the end of the day, I as a customer, when I'm trusting my money with a financial institution, I also want to know that, boss, this has been blessed by the regulator and tomorrow if something wrong were to happen, I have a recourse to it, right? Coming to your second point, how can the regulators, work very closely on some of these, right? See, first and foremost, I think there is enough and more precedence that has been set across the world. So, irrespective of whether the regulators have the right kind of knowledge repository with them, I think there are enough and more reference points externally which you can refer and arrive at which is the closest country that fits your bill, okay? Like I said, you can come with a different version of licensing for various players and go with the activity-based licensing rather than a principle-based licensing, which means you only regulate the activity and you ensure that they comply and even the financial institutions get the comfort to work with these entities. I think what is very badly needed is some kind of steering committee, some kind of a think tank, some kind of policy advocacy which is required to socialize between all the key stakeholders. Then you can speak a common language. And a lot of these things where, you talk about how do I do lending in absence of a robust bureau score? Why can't I get into lending on an alternate scoring mechanism? I mean, just to give an example from a Phonepay standpoint, I mentioned about we powering 50 million merchants today, right? A lot of them are mom and pop stores, SME, MSME, who are not into the mainstream of financial services. But we worked with financial institutions and came back saying, okay, I have scrubbed my database. I have these vintage merchants with me who have a very robust prediction around their cash flows because they have been doing business with me for a certain period of time. I know what are their seasonalities. I know when are their spikes. I have a good line of sight because on a daily basis, I also process their transactions. What if I come up with an equated daily installment instead of an equated monthly installment? So the banks and NBFCs are liking this because I am helping them take a more judicious call around a customer who otherwise, if they were to go through the underwriting policy of the banks, will never qualify because they only look at a robust scorecard. Or in absence of that, they will look at a very hard collateral which this person may not have. Does that mean he's a defaulter, he's a black sheep, he's out to be a willful defaulter? No. Now we are seeing that the repeat loans in such cases, there is a churn of 3 to 4 times and now over a period of time, they have built a very healthy score. So that's also one way of getting them into the mainstream. And last but not the least, I would urge the regulator to be part of the consultation process itself and be on the discussion table right from day one. The reason I will tell you why is many a times the regulator ends up being a referee only when the match has ended. He's just trying to come and tell who is right or who is wrong, okay? But the point is, if you are part and parcel of the discussion, you are up to speed even on the tech side, right? What is the technology? How is it going to help? That will help them frame the regulations, change, do course correction immediately rather than waiting for something to go wrong and then come back with the changes. So, I mean, it's also about how agile, how hungry that entire ecosystem is. The regulators will have to play the role of an enabler, and again, the players on ground will also have to play their role with the right amount of responsibilities.
The take-home message is innovation happens because of regulation. Right? Because US came with the Clarity Act, there's been a lot of innovation in stablecoin.
Correct.
Exactly the point. Correct. Ladies and gentlemen, I would like to now come to the audience for the questions. I think we have slightly less than 10 minutes. Audience, somebody pass the mic? Any questions? Otherwise, I have a lot of questions, but I'd like to hear from you guys.
We have any questions from the audience? Audience-बाट केही प्रश्नहरू छन् भने हामी यहाँहरूलाई यो मौका दिँदैछौँ प्रश्न सोध्नका लागि हैन भने I think Mr. Michael Siddhi already has a list of questions ready. उहाँले फेरि त्यो सोध्नु हुनेछ हामीसँग लगभग 5 मिनेट छ यो इन्टरेक्सनका लागि कोहीसँग केही प्रश्न छन् भने
The clock is ticking down now, right there. So let me ask the last question, and I'll respond at the end. I think, Nepal's financial ecosystem is probably moving in a transition sort of a phase. Right? We are moving from a basic retail payment system to building a proper financial stack.
Yeah.
Right? And through the process of competition between banks and fintech. How do you think this next layer can be developed for the banks and fintech when they come together? How can this next layer needs to be developed in Nepal now?
See, like I said, right, fintechs exactly know how to do the distribution. They exactly know how to create the customer engagement. They know how to build the UI, UX, right? And banks are very good at, the risk management, balance sheet management, governance, all of it. I've always been a firm believer that your digital payments are just the initial hooks to get people into the mainstream of financial services. The next logical step, and which can actually give a lot of exponential growth, both to the fintechs as well as the financial institutions, is how do I convert these into lending products? How do I convert this into insurance? And unfortunately, most of the Asian countries, we are extremely credit hungry, and we are extremely under-penetrated on the insurance side, right? We have seen that journey of ours, right? And we are seeing a tremendous growth. One is, of course, the logical one, which is the consumer side of unsecured business. But the merchant lending is something which is giving a tremendous upside. Same on the insurance side, while a lot of non-life activities gain more prominence as compared to life, because those are fast transacting, like your car insurance, health insurance, fire burglary insurance. Those can be bundled again with your merchant lending, etc. Right? So you then start building layers and layers on top of it and provide more and more financial services. I mean, this is an old rule in banking that if you don't cross-sell and upsell to the same customer at least 2 or 3 products, the stickiness never develops, right? Then again, you look at the investment side of it. It could be mutual funds. So we started something known as the micro savings for gold and silver, right? I'm sure the aspirations will be there, right? It's just that you don't have the right products. Every time a person can't go and do 5,000 rupee SIPs or 5,000 rupee gold ETFs, but can I convert it to 100 rupees on a daily basis? See, you have to also understand that, and again, just correct some of the numbers. I'm assuming Nepal's entire population is some 29.8 million, roughly, or 30 million if you have to look at. I think the median age of this country is almost 25.
Something like that, yeah.
Right? So you have a very young population into the mainstream, which means they are not going to give you any consideration for the hardships that you have with regards to regulation. If a Uber cab can be booked immediately, they also want their financial services to be done the same way. How do you get these youngsters who are into the last stages of their educational life or early stages of their working life, in absence of a robust CIBIL score, how do they fulfill their aspirations? He may like to do adventure, he may like to own a new mobile, he may like to have a two-wheeler. But just because he does not have a robust bureau score, will the financial institutions not give him? I again heard the Honorable Finance Minister talking about how do you come up with the alternate scoring mechanism, right? Just because I have never taken a loan and not repaid it, does my paying off utility bills, my mobile bills, etc. on time does not make me a good person or qualify me for getting a loan? So those are, I think, the low-hanging fruits, if you ask me, which are easier quick kills if done with the right intent and if it is backed with the right regulation, because then it gives the much needed impetus to the financial institution also to innovate and come up with the right fits for these kind of solutions.
Absolutely. The idea you picked up, the multi-product, is something there's a lot of room for us to do, and then there's a lot of learning that we need to get from. I know Phonepay has a lot of sort of those ecosystem where there's a lot of payment capabilities. So these are the things we need to pick up. And as rightly said by Amit ji earlier and Honorable Finance Minister, there's no need to reinvent the wheel. You just learn it, pick it up, and implement it, right? With that, I know I've just run out of time, 30 minutes there, right? Thank you very much, Ritesh.
Thank you,
Always a
pleasure.
pleasure talking to you.
Thank
Good
you so
learning.
much.
Right.